Good morning, everyone. I'm Baba Alukular, TNP's managing partner, and I welcome you to our fireside chat this morning with none other than Chika Nwobi. We're celebrating World Intellectual Property Day today, and we're pleased to host a two-part fireside chat, the first of which is with Chika this morning, and the second of which will take place tomorrow afternoon with Olumide Soyombo. The theme of this year's World Intellectual Property Day is IP and SMEs, taking your ideas to market. We have designed this fireside chat to provide a platform for startups, SMEs, and creatives to learn and gain insight into their IP rights and how to commercialize it. And we've largely brought two experts from the tech space and also investors that have broad knowledge of intellectual property and how to actually commercialize your rights as a startup, a founder, a creative. World IP Day 2021 shines a light on the critical role of small and medium-sized enterprises in the economy and how they can use their IP rights to build stronger, more competitive and resilient businesses. Chika will discuss broadly on issues that have been distilled down to 2 points. The first is the critical areas and sectors that people should be looking to build ideas to solve current challenges. The second is the critical role of SMEs in the economy and how IP rights can be protected to build stronger, more competitive and resilient businesses. I've known Chika for more than a couple of decades now, and I can say that he's one of the people that is largely responsible for me and my firm being tech fluent. Chika is the founder of Decagon, a platform where world-class Nigerian software engineers are equipped with the skills to fuel the growth of the African technology ecosystem. Before Decagon, Chika has been instrumental in incubating over 20 startups, including Baby Bliss, which is Nigeria's top omni-channel platform for mom and baby, Jobberman, which I believe the whole of Nigeria, everybody knows about Jobberman. I don't know why Chika never got me to invest in Jobberman from day one. I know we were doing the work there, but that's one of those businesses that I didn't get the benefit of investing in. He was the founder of MTech, where he launched Nigeria's first mobile internet service with MTN Nigeria in 2001, and he helped pioneer the mobile VAS industry. Chika and I did a lot of work with mobile VAS industry there. We did True Tones, we did ringtones, we had all sorts of sports and entertainment simulcasting over telephones our telephones then, we didn't have smartphones. This was before the day of smartphones. He's a member of the board of Unilever PLC and a venture partner in Rise Capital, an emerging markets focused VC firm that has invested in Gokada, Prep Class, and Iroko. Chika is also a member of the Governing Council of Anambra State Investment Promotion and Protection Agency. Chika is also responsible for teaching me a number of Igbo phrases and idioms. He has a BA in economics and a BSc in computer science, and is in the MSc Software Engineering program at the University of Oxford. He also completed the Stanford University Seed Transformation program. Chika is passionate about education and developing young people, and has been invited to speak at Wharton, NYU, and Lagos Business School. It is on record that Chika referred a young lawyer to my firm, who since then joined and has been fantastic working with us. He has also served as a judge and mentor for entrepreneurship programs of Federal Government of Nigeria and the World Bank. Chika, it's a pleasure speaking with you this morning. We're going to go straight into the questions. We spent about 25 minutes here, and that will probably be the breadth of this fireside chat. Very lovely to have you, Chika. You're still muted. You see, we're using this technology, and even as we still face those challenges.
Great to be here, Baba. It's really good to connect.
Really well appreciated. So, Chika, the past decade has shown that tech is largely, and you'd have seen it written and said in a number of fora, that tech is Nigeria's new oil. Do you think it's just a fad because of the dollar inflow into the sector in the last decade? Or is this really our reality and which we should be looking to focus and build our economy on? Chika, over to you.
Well, I would say certainly the reality, well, certainly the opportunity. If you look, I mean, this is global, right? If you look at, um, just look at uh, the stock exchange, the Nasdaq or the New York Stock Exchange, and you see that like globally, like seven of the top 10 companies in value in market cap are tech companies. In 20 or 30 years ago, that would have been manufacturing companies. Before that, that was like energy and manufacturing. But now it's tech. The heart of value creation in the world is technology. And so this is not a Nigerian phenomenon, it's a global phenomenon. It just happens to be a phenomenon that Nigeria, fortunately, is able to participate in spite of our deficit in from the previous fads, or from not fads, from previous trends, from the previous industrial revolutions, and even in spite of our deficits in the infrastructure that you would need to be very successful in tech. What I mean is that, I mean, Nigeria was not really able to really play in the manufacturing so much. So even though I guess the richest man in Nigeria, or the most successful business in Nigeria, arguably is a manufacturing company, but we don't have many, and partly because we didn't have the infrastructure and so on and so forth. But so we're not exporting, we're not doing that much, right, in manufacturing. But with tech, in spite of that lack of infrastructure, lack of roads, lack of 24 hours power, lack of all the lacks, right? Tech depends mostly on intellect of young people, the ability to solve problems and to work really hard to build products. They don't need, the fact that our ports don't really work doesn't prevent them, and so on. And even our brand, our global brand being not so great, does still not a barrier to the really driven, young, smart team of people. And so that's the nexus of the global trend, the nature of tech itself being one that depends mostly on the hustling, super smart young person, um, uh, is such that tech is the new oil. It's better than oil. I don't want to. I can talk about that. It's better than oil, because unlike oil that is controlled, that you require like huge capital and huge infrastructure. Tech, young guys from OAU and one semi-young guy like me can get together and create a company and raise capital from the biggest hedge fund in the world, and nobody knows about it. It just comes in, and so that's what's happening, and that's what's going to continue to happen. So it's very much here.
Excellent. Thank you so much for that. So we've got an abundance of creativity in our youth. And truly, in terms of numbers, they're about 60-70% of Nigeria's population. Creativity is also in abundance. So we've got talent, we've got creative minds, and we've got the spirit of entrepreneurship and the strength to do the work. And you don't need as much investment and infrastructure in bringing up tech solutions. You just need to be smart, brilliant, hardworking, and could be one or two guys sitting in a room. And I remember several years ago when you started MTech, there were a bunch of kids in your offices, computers everywhere. And I'm literally, it was like these guys could sleep there. And we're talking 2001. Now we're 20 years down the line. So yes, as sophisticated as resource-based economy, resource-based industry is, there's a measure of protection that goes into that area and that avenue when people come together and pool their resources and invest millions and billions of dollars in pulling out fuels. In the creative industry, in the tech space, in the fintech space, and to be honest, we saw a couple of reports, a recent report where one or two tech companies in Nigeria had a higher valuation than banks like First Bank. I mean, that was shocking. 20 years ago, that was impossible. And as you said, manufacturing was truly the hub of our economy. But now, really, we should be looking at, it's not just looking, we should be investing on tech. But these guys have come together. So, Chika, this is where I need you. Because, and I need you to chip in here, the IP space can truly be a minefield to understand and to navigate for startups and creatives, and businesses in Nigeria. In your opinion, because if our government is truly what's the word, serious about growing our economy, then it needs to start to understand how to protect industries like this, because this is where the money will come from and where we can retain it. So, in your own opinion, what really, and I hate when people ask what can government do, but in this instance, really, government needs to do something. So what can government do to support this new next engine room of our economy and to enable it thrive?
Yeah. So, even though I said in spite of our deficit that tech is the new oil and tech will thrive, that's correct. And I said we don't need so much infrastructure, and that's correct. But we do need some. And I spent quite a bit of time like studying the ecosystem that are most successful in the world. So Silicon Valley is the most successful ecosystem, right? Worth more than probably most of Africa, just Silicon Valley ecosystem. So they're the most successful, and the key, the catalyst for that ecosystem originally comes from funding that came from one of the main elements was sort of funding from the government into something called DARPA that. And then also the existence of some of the best universities in the world in a very small radius. So those two things are government actions. The US government also sort of seed funded the VC industry. So they provided through the I forgot what their bank is, something like the SME bank. Anyway, they provided like the sort of they acted like the LPs, so like the fund of funds that went into seeding a lot of the VC firms. And then they, really critical is the clarity about patents. And so that supports like investments going into the space. So what does that mean, right? So if you think about what I said about the investment in like the internet and all those things came from DARPA, right? So you need some infrastructure. Like we in our business Decagon, we have software engineers that we train. We've trained the smartest people in the country. 100,000 people have applied to be at Decagon. We've taken just the top 0.5%. Half of them graduate and go work for the top companies because you need talent. So we're doing the work that the government ideally should have done, because we'd have had great universities, great companies go outside themselves in Silicon Valley because they can get Stanford grads. So we're doing that, right? But for the ones who we keep back, they have to work for international companies, but it's very expensive, like making sure they have 24 hours power and they have high-speed internet. The internet that we are paying 2 million naira for costs for 1 gig of band of data costs $99 in $99 a month in America currently. So in Silicon Valley, the government invested in some of these things, and I talked about IP thing. Now, the second most valuable ecosystem in the world is Tel Aviv. So when I say most valuable, I mean they take companies from startup all the way to IPO, and the people that invest money get a huge return. So Tel Aviv is the second most successful ecosystem. And I spent some time, visited there, spent some time looking at what they did. The exact same thing. The government had a plan. They proceeded. It's like they studied Silicon Valley. What happened organically over 20 years, like between this, I guess, 50s and 60s and 70s in Silicon Valley. They studied it and did it in like 3 or 4 years, right? And therefore, got the result. So they created a fund of fund to seed VC firms, invited VC firms, said, okay, we put in, if you put in $1, we put in $5, and then you guys invest. They put a lot of work into IP, just so that if people create something, then they can have patent protection and be able to monetize it and hooked up into the US patent system and all the same places. Same thing in London. The British government is doing a lot of work now. So those are, I would say, those are the three most successful ecosystems. But then if you look at developing countries like Estonia, Estonia is a very important example. There's India, there's Singapore. I spent some time in Singapore, again, looking at what they're doing in China. In all these countries, so Estonia, for example, is I think 1.3 million people. They have 4 unicorns. So Skype, Pipedrive, Spotify, Bolt, that's Taxify, that is primarily focused on the Nigeria market. Well, that might be stretching it, but we're an anchor market for them. But they did all this, they did this sort of combination of things, like figuring out capital, like seeding capital, seeding the capital, ensuring like IP works well. In Estonia's case, they went further and created like digitalized all of the government processes for you to be a corporate citizen, for a company to be corporate citizens, entirely digitalized, not just for their locals, but for the world. So you and I can choose right now to set up a company, and we want it to be Estonia. We never have to go there, and we get like the equivalent of digital citizenship for doing business, not for going there and going to school for free, but for doing business. And we can create a company as well, we can open a bank account and all that stuff. They did all that because they were specifically trying to catalyze that ecosystem. So those are the key elements. One is seeding the availability of investment capital. All the investment, 98% of all this investment that has been happening in Nigeria now has come from abroad. There's a little bit of angel participation, but majority of it is of local angel participation, but majority of it is foreign. There are issues, there are problems with that. We're very grateful, and we think it makes a lot of sense, but there are some challenges with that. Some light infrastructure. What the people like Singapore and Tel Aviv and all these people have done is just build out little tech parks. These are not, they don't have to be, it's nothing crazy, just places that have power and internet. No, it's no big deal. We are now doing the Decagon. We're doing that with Edo State government. We have a partnership that we announced a few months ago to do that. But there should be a lot more, and the federal government should get involved. And then talent, like getting people trained, and then IP protection, like making it really clear how this works and making sure that it's easy to happen.
Amazing stuff. Excellent. Thank you so much for that, Chika. I just got a few nuggets of wisdom on really what government at different levels should be doing. And I hope somebody from government or that is close to government is listening in here, because the reality is the responsibility truly to grow our economy rests on the shoulders of government, apart from the entrepreneurs and business people, because without the enabling environment to allow business thrive, we can only go so far. Otherwise, a number of we close to the young ones will follow the young ones and move over to Ghana, which has been happening in the recent past and will continue to happen if our governments from state and federal don't get serious about it. And I completely agree with you. State governments really should be able to, one of the lowest hanging fruits for them is to build technology hubs, power, give internet services. Once upon a time, I remember when we used to dial up for internet service and you hear ringtone before you got there. Now, everybody and his dog has a smartphone, and you can get on the internet in a second. The telcos are making gazillions of money from that. And if the government can just invest and reinvest more resources into that infrastructure, create ecosystem, create the enabling environment, protect intellectual property rights of the creators. I mean, when I say protect, real protection from administration all the way to enforcement. I mean, then we'd start to see more serious investment inflow into the country, and even within, we too would write our own checks because we are guaranteed of an income at the end of the day. Now, I want to go into some realities. I've seen and I know of your investment in two main companies in the technology and technology space, largely MTech and Jobberman. Now, at what point would you say a company moves out of the startup bracket? Because I remember then back in the day, in fact, I'm an MTech investor, and I'm sure my partner is on this call as well. I remember when we wrote that check then, looking when the private placement was done, we're like, we're going in, we're going in, we're going in. And perhaps it wasn't ripe enough at the moment. Perhaps the market, the trend in the market was everybody was doing private placement with a bid to IPO. But from your perspective, when would you say at what point does a company move out from the startup bracket? Because these two companies, large institutions, started as real startups, lean and mean.
Yeah, I think so. It's very interesting. Different sets of answers to that question. I think in tech now, things can happen very, very fast. I'm still getting my head around how fast things can happen because the first sort of business I was involved in did not have access to so much capital, and not just about capital, but to the structure of global venture investing. So there's like structure in venture investing right now is like really almost clear cut, right? Like if you have a really good idea and can do just do like a pilot of that idea, and it's an idea in a big market, and you're someone who has sort of the credentials or credibility, you should be able to raise what we would call a seed round of between $200,000 and $500,000. For some people go up to 1-2, but generally speaking, between 200 and 500. If you were to raise that in your first 12 months of existence, if you don't raise that within your first 12 months of existence, like if you start a company right now and you can't raise a seed round in your first 12 months of existence, you should be worried. So meaning that you should like set as a goal to do that, start talking to investors early, get in your seed round, so that you have the money to do what you need to do, right? Then after that, in around 12 to 18 months after that, you should do what people call a Series A, typically between $3 and $6, $7, maybe now it's even going up to $10 million. So in that first round, you've basically sort of gotten money in that first round, the seed round, you've basically gotten money into sort of determine that your company is worth about between $2 and $5 million, right? So you've raised between 200 and 500 for you've established that your company is worth between $2 and $5 million, right? So in the Series A, you're raising, 1, 2, 3, 4, $5 million at, $5 to $20 million valuation. So then you're still a startup, but you're moving out, right? By the time you have $2, 3, 4, $5 million, the kind of people that you're hiring, kind of financial operations you have, board you should have, the Series A investor will typically join your board, the kind of corporate governance that you'd have. So then this is in 24 months or thereabouts, right? You should be doing a Series A. If you're not doing it, then you should be worried, right? So that really should be the goal. In Decagon's, Decagon is a company that I started like 2 years ago, and we did a small seed round, and now we're getting ready to do a Series A. This is what's, some of the younger people or the new people that are newer to venture, that have come into venture with this sort of framework, with all the accelerators like YC and all of them already in place, they really get it and are like really focused. I was talking to one of my sort of mentees that I invested in this company, and I was like, "Oh, where are you?" And he's like, he just raised money like last year. I was like, "Where are you?" He's like, "Oh, he's in America. He's working on raising his Series A." So they get it and they're really disciplined about it. We, number one, think maybe it's not necessarily necessary because we have done it without that type of support. We're still not being focused and clear-minded about it. But I think anybody that's doing this should be thinking in that way. And once you raise your Series A, you should be behaving differently. Even to raise a Series A is that the kind of data that you have to show on your performance is such that you're still a startup, right? But you're just behaving differently. And a lot of things that Nigerian SMEs, problems that Nigerian SMEs have, you wouldn't be allowed to have them, because you have to have the corporate governance, you have to have the reporting, and so on and so forth. And then after that, people keep raising if their business requires it.
Thank you so much for that. So you've heard it. I mean, to grow from a startup all the way to an SME, and largely looking forward to exits, possibly IPO or otherwise, critical things are governance and structure, and of course, as Chika has mentioned, discipline. Now, this takes me to our next question. So we've set up the company. It's a startup. We've gone from seed to Series A and maybe even subsequent seeds. And we're now a thriving SME company. An investor such as yourself, you're now looking to make investments. You're considering, should I invest my capital in this SME, this tech business, or should I go into a large corporate, knowing fully well that the fundamentals that I'm looking for are there? And of course, you're now making an investment decision. If your thought process was to approach the smaller business, the tech business, the one that has phenomenal growth potential, how do you consider intellectual property rights in the funding round when you're making the investments? And how can the creatives, the founders of this business, take advantage of these rights in negotiations with investors?
Yeah. I just want to make a quick clarification about sort of we're using startup and SME sort of interchangeably. Generally speaking, in tech we don't. We just sort of think of, and why this is important, because what you're looking for, an SME should be chasing profits. So if SME is 3 or 4 years old, and if it has revenue of 500 million naira, then it should have profits of like maybe 100 million, right? That's sort of the SME mindset. But in these tech ventures, where you say a startup, right? They're chasing growth. Because you're chasing growth, you are okay to lose money, because you're basically, think you can, instead of maintaining your margins and not investing in advertising or more product development, you keep investing, losing money because there's a huge market that you want to capture. And so I think that's one way to think of these two things differently. But your question was what IP measures should be in place by the company, in the company?
No. So my question is, in terms of valuation of the IP rights, the founders' IP rights, whether it's goodwill, whether it's the fact that they brought the tech, the IP related to it. Look, these guys run lean and mean businesses. There is no money to throw into advertising, as you said. So he's called you in and said, look, okay, Chika, I can come and invest in my business. In terms of valuation, how much value is he entitled to ascribe to the IP rights that is brought into the business? Because as a region, as a people, and it's important for advisors like my team to understand that when we're advising these guys, you need to ascribe a measure of value. I need to find how to protect, and we have those protective mechanisms to protect, your IP rights in such a way that it gives you additional value in the business vis-a-vis your shareholding. But as an investor, what would you allow? What would you look at? What would be palatable to you in terms of valuation of IP rights or creatives in this?
Okay. Yeah, I think, I don't know, like how normal traditional business valuation used to be done, right? Where you look at cash flows, there's this like DCF, so that you look at cash. So you look at the cash flows, the core of the valuation is driven by cash flows. Then you apply a risk discount, right? So that risk discount is like a measure that you can adjust. If one company in Nigeria and another company in America that have the exact same projected cash flows, if you're an American investor, you might penalize the Nigerian company for being in Nigeria because of your assessment of the risk in that company. So you come up with the same sort of valuation for the two companies, then you might discount the Nigeria one a little bit because it's in Nigeria, and it's a subjective thing, right? I think IP, right, ownership of IP or creation of IP is sort of the same, right? It's not the driver of valuation, especially in like most of the kind of companies that we do in Nigeria, where they are not like deep tech, and it's not the fact that nobody else in the world can do that thing, right? That's attracting the capital. So it's usually the business model so the business model, the team, the execution so far, and basically the confidence that that gives to the investor that this projected cash flow that you are envisaging in the company, right? That's what is determining the value of the company, right? So it's really, this is a, multi-billion-dollar opportunity, and we are probably gonna get it. That's sort of what determines are investors interested in investing or not, right? Then how much technology you have becomes like that risk factor. So it's like something that investors that I would as an investor use to, just to filter a little bit, just a factor, just a little sort of multiplier. So I wouldn't, the IP in there would not be the main driver of valuation, is my point, right? And typically, in order to raise capital fast, because the thing that in startup phase, it's very early, there's a lot of uncertainty. So like the investing world has sort of built these like almost like formats. It's just like in salary, right? It's just like in consulting or in law, right? Like how much should you pay a young lawyer? I mean, the lawyer may be very, very brilliant, and another one might be average, but you're not going to like spend all your time trying to figure out exactly how much more brilliant is this person than this person. So you just have a rule of thumb, right? Say, okay, young lawyers in top firms earn this, then year 2 or year 3 associates earn this. So that's what has happened. That's the main driver of valuation. And then the amount of tech you have might cause you to be in the upper bracket or in the lower bracket. So I would say, like, to the advisors and to the founders, you don't want to like over flog sort of the issue of the IP. It's in valuation, right? It's typically, okay, like I said, like a lot of seed rounds are now between $2 and $5 million, what they call a valuation cap, right? So you want to be around there. If you're trying to do, it doesn't matter what you have, if you're trying to insist at your seed round that your company is worth $50 million, like people, it's just too much work for them to process, right? And you might be correct, but it's just too much work. It is not. So so you want to just understand sort of the buckets, and that the reason why that's important is I talked about the timing, right? Like if in your first 12 months, like you want to establish that you have enough value in the company and build out enough. You don't, I see some people build for 3 years before they raise money. And unfortunately for them, most times they'll still get the same sort of valuation range as the person that did raise money much earlier, built only a little bit, because they're giving you the money. You want to show enough so that when they give you the money, you're going to build. So you don't need to go ahead and build to receive the money. They'll still give you the money. I mean, they'll still give you roughly the same valuation. So yeah, I hope this is helpful. I think I would like have people think about building enough to make people, that's building enough of this in their innovation to make people see and believe that they will get there. And then the amount of stuff you've built can maybe have you argue that your company should be valued at seed instead of, I said, let's say the range is between 2 and 5. You can aim for 5 because you've built a lot, but it's not going to be 50 usually, generally speaking. Yeah.
Thank you for that. So I see it's important. In fact, it's critical that you manage your expectations as the creator, the founder, in how much valuation you're ascribing to your IP. Yes, you have the IP. Yes, you've built the tech, but you must understand that it's better for you to have a piece of a pie that has substance in it than having a huge pie without an empty pie that you just dig in and there's nothing there. Lastly, Chika, we're going to close any minute now. We've all seen what the world has become in the last year and a bit, and it's shown areas of potential in terms of business activity. It's shown the fact that the logistics business, particularly things like, I mean, you invested in Gokada, but hey, we know how that happened with government and whatnot, government regulation and what have you. But then, of course, with the resilience of the business, the people behind the business, they've also managed to turn things around and still run a logistics business of it of sorts. So now for me, it's the last question. Tech and pharmaceuticals. Your thoughts on investing in, perhaps somebody can bring a solution, because we know we have a dearth in health services in Nigeria. There's nothing, we're ground zero. So I just had a thought. Tech, pharma, a road to investment. Your final word.
Yeah, but I think that's interesting, and it's something that I've been thinking about of recent. Obviously, because of COVID, a lot of people that invest have been just confronted with just how important pharma and health are, and now that's like there's COVID vaccine shots all over the world, and it's free to people, but it's not the companies didn't give it out for free. Like they got paid like billions, right? So you recognize that that is a huge opportunity there. In my own case, also, our company, Decagon, were involved in building like the tech, meaning like the sort of web solutions and tech infrastructure for one of the largest pharma companies in the world now. And so that also, they're sort of how much they invest in tech makes me understand, whoa, this pharma, like, it's huge, right? So I think it's an interesting space. It's a space that we haven't really seen. I don't understand fully like what the process from identifying a problem to solving that problem. I think part of how it's different from tech, right, is that in tech, you identify a problem, you can build an MVP to show that you can solve the problem with very little money and very, very, very fast. Not in tech, right? In pharma, it's sort of almost the opposite, right? It's like you identify the problem, you have to put in a whole bunch of capital and put in quite a bit of time to show that you can solve the problem, and then you have to test and so on and so forth. I think that there's I mean, Nigeria is full of potential and full of promise, right? I think and if you understand sort of the history if you read and understand the history of some of the big discoveries in the world, right, you find that it's from people studying previous solutions, like native solutions almost, right? I read up how the first vaccine came from an African sort of slave in America who went and told his master, that master, in Africa, we used to do diseases that to solve viruses, and they then structured it and created vaccines, right? That's why I read something like that. So what I'm saying is that, because we have had a lot of like people traditionally like solving health problems, pharma problems, we probably have a lot of raw solutions that with some investment and some structure could be cleaned up and structured and into medicines, into drugs. I think there's opportunity there. You need like structured capital. You need like funds that can put in money and wait, or big companies. I think we have some successful big companies like Emzor, local companies. I don't know how much of them are doing local research. I think it's something that we should be looking into. I think it's a good. I mean, because people are going to need medicine forever, right? There's tremendous opportunity in tech itself, and I think we're trying, but I don't think we're really taking advantage of the opportunity. So therefore, it's like when you have a huge farm, a huge harvest that requires like 1,000 people to be harvesting. Of course, harvests don't last forever, right? If you dull, all the fruits of the harvest will spoil. So I feel like somebody who I've been seed sowing and cultivating. You talked about sort of some of the work we did together to create the first internet service in Nigeria, the first mobile internet service in Nigeria, and so on. So I feel like somebody who is in a harvest, that there's 1,000 that requires 1,000 harvesters, and we only have 100. And so I feel like really, I just like my head is down trying to bring in more capacity to bring in the harvest, and really haven't had time to look at other spaces like pharma and other opportunities. So I would invite like the leaders in those spaces to like take the lead and like see what can happen there.
From a key investor in the tech space, you've heard it all. We've got potential, we've got promise. There's a huge harvest in a country that has boundless talent and creativity. One that has moved, is moving, must move from a resource-based economy to one that is more or less a intellectual capacity-based economy, from our creativity, our knowledge, our sports, our entertainment, to truly have a unique future. Otherwise, we would never, ever hit that potential as a country. There's so much enormous opportunities for us from the tech space, from pharma, from medicine, from different areas of endeavors. And I believe at some point there'll be a convergence and a complete alignment, so that a number of us can tap into investment opportunities as people like Chika and co have. Chika, a million thank yous for joining me this morning. I'm really, really grateful. I'm also proud to be associated with you from the beginning of the game in the technology space and witnessing the sort of successes that are being done today. You're truly one of the unique ones that have steered the course, and I say huge thank you on behalf of the entire team at TNP in our celebration of World IP Day 2021. I don't know if there are any questions or comments. If there are, I'll look them up and see if, I see there's one question. It comes from your old friend Chika. It's Babajimi Ayorinde. He's asked a question: if you think the fintech ecosystem in Nigeria is becoming over-regulated.
It's fintech. So I spent some time this last couple of weeks with some of my friends, or some of the companies I've invested in the fintech space. They are very worried about the regulation. And a couple of companies have been negatively, adversely affected by some of the recent regulatory actions. But I encourage them. I said to them, look, in our lifetime, what has been the most regulated industry? When you think about regulated industries in Nigeria, which industry is highly regulated? The banks. I said, which industry have we seen hardworking young people that have nothing, just mind and drive, go from nothing to becoming billionaires? The most in Nigeria in our lifetime? Banking. So I think that this regulation is not something that people should see as something to chase them away. In a sense, it almost puts some of the order and structure. Once that regulation is in place, it almost puts that, this is how to play. And investors also know that, you guys have figured out some of the things. We keep talking about history, but remember, when we created mobile internet and VAS and all that stuff, telco was extremely regulated in Nigeria, right? But maybe we were young, but we went in and figured, wrote up the rules and started doing it. And the regulators caught up. And when they caught up, because we're already big and respected, then they will call us for a meeting. And they typically will not kill our businesses. So, and if you look at even some of the regulatory actions that have happened, they are not killing the businesses. They are, it's almost like when people are young, when people are doing things, and somebody comes in and blows away, says, okay, what's happening here? Then everybody will talk. You say your story, then they will figure the whole thing out. So I would say that, and by the way, investors, international investors, they know, they understand. It's not as if they expect everything to be perfect, and these regulatory actions are not really chasing them away per se. If you look at Uber, Uber went into a unclear market globally and have been fighting regulators all over the world, and investors are still investing. So businesses will not fail because of, let me not say it that way, but generally speaking, the most exceptional founders going after exceptional opportunities will not be stopped. Like their failure will not be because of regulation. They will succeed in spite of, even if the regulation is bad or even if there's mistakes, they will still be successful if they've built something valuable. The good team building something valuable, they'll be successful. So so I don't think, I don't think it's that, I don't know enough to say whether the regulation is too much or not. I think getting it right, getting it perfect is not possible. That's not really the point. And by the way, when I've spoken to some of the founders that are the leaders in these different sort of companies that have been affected, they actually say there's a good deal of engagement going on behind the scenes with the regulator. So some of this stuff is sort of posturing, some of this stuff is like, just trying to let everybody know who's boss here, so that everything can align. It's also regulators trying to even understand, because things are happening so fast, changing. So they even want to understand what's going on. I would encourage tech founders to, initially, you don't need to worry so much about regulation. When you're trying to start a business, like focus on whether the business can work. When the business can work, if you start being big enough, you can go and meet the regulator, or they will come and call you and for meeting. Then you will be doing meeting. Meeting is no problem when there's something of value. It's when there's no value, that's when you'll be talking about regulator. But once you're making money and regulator comes, then you will be doing meeting now. Meeting, and you can even pay somebody to be doing the meeting safe. So I don't think people should be should be afraid.
Spoken like classic Chika Nwobi. Very, very correct. So the problem isn't over-regulation. I'd agree with you that problem one is a confusion of, confusing regulations at certain instances, perhaps not over-regulation, but the regulator having to play catch up and needing to show who's boss. That's the reality. But as you said, if you grow your business, you start your business, you grow your business, you're big enough, the reasons why you also have advisors is so that, they can engage, take stakeholder engagement on your behalf and with you. So your regulators understand the space, understand what you're doing, and then start to put proper regulations and implement the same to your benefit and the whole ecosystem. Chika, it's been fantastic. We intended 25, 30 minutes. We've actually almost gone closer towards an hour. Thank you so much for sharing your time with us this morning, and I look forward to seeing you very soon. My love to the twins. Take care, Chika.
Thanks,
take care.
All right, take care. Bye.